Let me ask you something. You opened a position this week, maybe yesterday, maybe this morning, and be honest with me right now. Did you enter that trade because your system said to, or did you enter because you felt like it was going to pump? That one question, right there, is the difference between a trader who lasts and a trader who blows up. And today, I'm going to show you the mindset shift that the top 10% of traders use to consistently win in the short term by thinking in a way that most people completely ignore. Stay with me, because what I'm about to say is going to sound backwards, but by the end of this video, it will completely change how you trade. Here's the paradox that almost nobody in crypto talks about. The traders who consistently win in the short term are the ones thinking long term. And the traders who are obsessed with making money this week, this trade, right now, are the ones who eventually lose everything. I know it sounds backwards, bear with me. Think about it this way. Imagine two traders. Trader A wakes up every morning desperate to make money today. Every red candle feels like a personal attack. Every missed pump feels like a disaster. He's emotional, he's reactive, he's basically gambling. Trader B wakes up and doesn't care what happens today. He's playing a 12-month game, a 3-year game. He's calm, he's systematic, he's building something. 6 months later, Trader A has blown 3 accounts. Trader B is quietly compounding. Which trader are you right now? And more importantly, which trader do you want to be? All right, let's get into the actual framework. 3 layers. By the end, these will rewire how you think about every single trade you take. Layer 1, and this one hurts people to hear, is that protecting your capital matters more than chasing your reward. Amateurs chase reward to risk ratios. Professionals protect capital. Here's why that matters mathematically. If you lose half your account, and I've seen it happen in a single week in crypto, you don't need a 50% gain to recover. You need a 100% gain just to get back to where you started. The math is brutal, and it punishes emotional traders every single time. So what does a long-term thinker do instead? They risk 1 to 2% per trade, maximum, always. They define exactly where they're wrong before they enter, not after things go south. And they eliminate revenge trading completely, because revenge trading isn't trading, it's emotional gambling with extra steps. Say it with me. Survival is the real alpha in this market. Layer 2, and this one is where most traders' egos get destroyed, and I say that with love. A winning trade with bad execution is still a mistake. Let me say that again, because it's important. A winning trade, one where you made money with bad execution, is still a mistake because you got lucky, and luck doesn't compound. Short-term emotion only asks one question, did I make money? But long-term thinking asks 3 very different questions. 1, did I follow my system exactly without improvising at the last second? 2, was my entry based on actual market structure, or was it based on a gut feeling? 3, was my risk defined and accepted before I clicked buy? If the answer to those 3 questions is yes, that trade was a success, whether it made money or not. Because over 100 trades, over 200 trades, a system executed perfectly will always outperform one traded emotionally. That's not an opinion, that's just math. Layer 3, and this one is the one that genuinely changes lives, but only for the traders patient enough to let it work. Compounding over excitement. The crypto space is obsessed with 10x trades, 50x trades, the next moonshot. And I get it, that's exciting, that's why we're all here. But here's what nobody tells you about those 10x chasers. Dramatic pause. Most of them are still broke, because chasing one massive win means taking massive risks, and massive risks, without discipline, always end the same way. Now look at this. A consistent 3% monthly growth compounded becomes 43% a year. That's not a lottery ticket, that's a hedge fund strategy. That's how real capital is built. The goal isn't one insane trade. The goal is to still be in this game 3 years from now with more capital than you started with. Think like a hedge fund manager, not like someone who just discovered leverage for the first time. Now, I need to be real with you for a second.
Crypto is not the stock market. It's not Forex. It's not commodities. Crypto is specifically designed to break undisciplined traders. Narratives flip overnight. Liquidation hunts wipe out over-leveraged positions with surgical precision. Projects that were top 10 last year are forgotten today. Without a long-term mental framework, without the 3 layers we just talked about, this market will take everything you give it and hand it to someone more disciplined. But with that framework, you accept drawdowns because you know they're temporary. You protect your mental capital, not just your financial capital. And you build the kind of consistency that actually survives bear markets, black swan events, and everything else crypto throws at you. Consistency beats hype every single time in every single market cycle. So, let me give you the professional mindset in 3 sentences. Burn these into your brain. 1. Losses are business expenses. Every legitimate business has costs. If you can't accept losing trades as the cost of running your operation, you will never operate like a professional. 2. Patience is position sizing. The best trade you'll ever take is sometimes no trade at all. Waiting for the right setup is not laziness, it is active risk management. And 3. Discipline is your actual edge. Not your indicator, not your signal provider, not your entry technique. Your ability to follow your system perfectly under pressure when every emotion inside you is screaming to do something else, that is your real edge. Short-term charts, long-term mind. That is the combination. Here's the final truth I want to leave you with. If your goal is to win this week, you will eventually lose. The market is patient. It has more capital than you, more time than you, and more emotional weapons than you. But if your goal is to still be trading profitably 3 to 5 years from now, your behavior changes immediately. You size smaller, you journal more, you think in probabilities. You protect your psychology like it's your most valuable asset, because it is. And here's the part that nobody believes until they experience it themselves. When you stop trying to win this week, that's when your short-term results actually improve. The market rewards discipline. Not urgency, not hype, not emotion, discipline. Now, I want to hear from you. Drop a comment right now. What's the single biggest trading lesson that changed how you operate? If this video gave you something real, share it with one trader who needs to hear it today. Subscribe if you want more content that actually respects your intelligence. I'll see you in the next one.